Hi everyone, welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather. It's the 2nd of February, so we just finished the month of January, so we're going to look at the monthly chart. We're going to have a look at which of the predictions we were right with and which we were wrong with, and get a bit of an idea for next month. In this video, I'm going to talk about the FTSE 100 futures, so let's go and take a look. Hopefully at the end of the week, you're starting to do your own kind of weekly review. I like to go through all the trades that I've done, how I went against my trading plan, look at my journal, anything I noticed, looking at areas that I can improve, whatever I'm researching at the time. But the market update is a way I can practice my ability to read higher time frame price action and then how it impacts my day trading. So going up in a bull channel, we're always in long, we're above the 20 and the 200 moving average. Whenever you think you know the always in direction, that's when it's good to look for measured moves. Back in early last year, we were in a very tight trading range, and I said I think this was going to break out to the upside because on the higher time frame, we just kept buying at lower time frame support, and we're around about a measured move up from this range. It's not a very clear range. We had one very strong move up to the high of the COVID crash. So this was 3 legs up in a parabolic wedge. It had a couple of legs sideways, and then it had a very strong spike here. This formed a more complex pullback, 1, pullback 2, pullback 3, and this was a wedge bull flag, one of Al's best trades, the breakout pullback entry. And on my higher time frame account, I took a long time frame swing because I expected to get to the high of this prior range. That's on the monthly chart. On the weekly and daily chart, we had lots of setups, but now we have a new spike, and then we started to go sideways. Whenever you have a tight trading range and it is sitting above the moving average in a bull trend, you've got to expect an upside breakout. And for most of last year, I said, yeah, this is pretty good, and the bears are doing everything they need to. The problem is a tight trading range in this location is usually continuation. Yes, it can be a final flag, so we can go up and come back. Yes, it can turn into a trading range, up, down, back to the middle, but it's at least 55% probability we're going to go higher. Now we've got the biggest bull bar in this entire bull channel. We've got at least 3 legs up, but there's still nothing to sell. So still always in long, better to be long or flat. I think some traders might look to take profits. It's not really clear where the top of where a measured move is from this range on this chart, but I think we're going to 9,000. I think if you bought the consecutive bull bars, which is what Al talks about a lot in his course, you're above the moving average, you've got consecutive bull bars closing near their highs, buy, put a stop below, you're at your 1-to-1 target, so you're happy. If a trader waited to buy a high 1, there's an inside bar. Traders taking that high 1 need 91.96. But next month is important. Similar to the DAX chart, will this bar get follow through? We can see we've now got a gap between prior all-time highs and all this COVID price action. The bears had 2 attempts to reverse, and it was bought twice, and now we're going up. Some traders might even be looking at this as one breakout and then expecting some kind of leg 1 equals leg 2 move. And you can see that almost exactly gets to 9,000. How do the bears see it? Well, this was a tight trading range, which is going to act as a magnet. So some bears might wait for a bear bar to scale in, and this will be a target. But at the moment, nothing to sell. If you bought above that bull bar, you've got 1-to-1 and you've got to close. Maybe those bulls will hang on for more. I think they might have used a different stop. So if they bought the close of that bar, they're at 1-to-1. If they bought above this bar, then they needed to go a little bit higher. But certainly nothing to sell on the monthly chart. So what happened on the weekly chart? Well, as we came up above this bar, this is now a bull close, closing outside this entire range. And that is important because that says that anyone who was short in here has now got a decision to make. The following week, I said the minimum the bulls want is a bull bar. And they didn't get it. It's actually a small bear bar. The open was 505, the close was 502. But we're talking 3 points, so that made this a very low probability sell. If it's a low probability sell, what's the high probability? Well, the high probability is buying below it. So you put a stop below this trend bar, you buy 1 tick underneath that bar, and your target is up here, 87, basically 8,800 flat. Other traders won't buy here. What they'll do instead is wait for these bears to get trapped and then enter just above the high of where they get stopped out. And those bulls could have already scalped one-to-one. You see how they were able to do that? So there are a couple of places that you could have bought on the weekly chart. I was trading FTSE on the daily chart, but I'm always aware of the higher time frames. So I've got these marked out on my chart. There are lots of gaps below. We've gone up, pause, up. So next week is important. This is an outside bar. This is a spike and channel. And the question will be, how does this channel form? Does it look something like that? Maybe it's steeper. This is a higher time frame channel line. I don't pay too much attention to these, but I will look on a higher time frame to see if traders are looking to fade. I'm certainly not looking to short FTSE. We've had basically a breakout and follow through around a tight trading range. If this tight trading range is going to act as a final flag or a magnet, that means we can come up, we can come back, we can go down, we can go back. And then this will be probably the middle of a trading range later on. This is a problem for bears because they had so many chances to turn it down and they did really well here. This was the only time I was worried about my higher time frame position, but once that was the follow through bar, I was pretty confident that trading range is going to win. This is not a good place to sell with a stop there, and you can see this bar here did not get any triggers below it. So it's the same pattern we've been talking about on both DAX and FTSE. This triggers, this doesn't, the moment we go above the high of this bar. So someone had to sell there for this to be a bear bar, but they see this. A lot of traders are going to get out on this bar or get out on a follow through bar. And these bears either get out above that bar or above this bar. I said in my market report, there were so many possible swing points. This could actually fuel a move right up to test the high, which is what it did. So always in long, better to be long or flat. It's a spike and channel. That was a breakout pullback. This is also a high one buy, but you've got a lot of distance to the moving average, about 350 points. The last time we were this far away from the moving average, that was about 500. So we've certainly got room to the upside before there's a pullback. Well, thanks very much for watching. I hope you found that valuable. If you're in the Brooks Price Action live trading room, it's a free day tomorrow, so you'll be able to catch me tomorrow night. If you're not in the Price Action trading room, then I'll catch you next weekend. Have a great trading week, and I'll see you then.